Angelo, what do you make of this sort of race between Alphabet and Nvidia that we've seen play out over the last couple of days? The narrative shift that, hey, wait a second, Alphabet with a 10-year-old product might actually have something that could compete with Nvidia's GPUs. Do you buy it?
Yeah, and thanks for having me, Tim. The way I look at this is, listen, Nvidia's had the 90% plus market share on the compute side, right, with their GPUs. Our view the whole time was that they were going to lose share anyway, and that custom silicon chips were going to gain, a bigger piece of the pie. AMD eventually was going to have its share as a second alternative to the GPU market. So this is kind of playing out the way we anticipated. It's going to be a slow roll, but ultimately, listen, I do think there's a place for TPUs as well as other custom silicon chips. I don't think you can necessarily sleep on, a company like Amazon. But it's interesting that the strategic pivot that potentially Alphabet is looking at, potentially looking to sell those TPUs to Meta, and to the extent that that's true, and to how quickly some of that scales up, I think is a risk to the Nvidia story. But again, I mean, Nvidia will continue to be the dominant player out there, and I think investors, maybe shouldn't be looking, too deep into the share fight, and kind of start, can also consider, the upside in terms of the total addressable market opportunity here over the next couple of years.
Well, it makes me think of the incredible and enviable margins that Nvidia has in its data center business, and I'm wondering, okay, well, even if Nvidia still becomes and remains the clear market leader, does it put margin pressure on the company? Does the company have to come out and say, okay, well, we're not going to charge as much for these GPUs because they're potentially, at least for some customers, there may be another option out there? Does it put margin pressure on them?
I think that's an interesting point. The way we look at this actually is a little bit differently. I mean, when we think about kind of these next gen offerings that NVIDIA is set to roll out, and we're big believers that, listen, NVIDIA is a generation ahead. They will continue to be, leaders in terms of technology advancements. But as you roll out Rubin, and Rubin doesn't really have kind of the step-up function, to Blackwell the way Blackwell had relative to Hopper. But you get to Rubin and then Rubin Ultra, you're going to see some significant content growth here over the next couple of years from NVIDIA in the data center. So that should continue to hold up their revenue trajectory, as well as the margins here for the company. So we're not necessarily concerned about margins here. But that said, listen, if we get to a point where the whole debate between supply and demand starts to even out, and those competitive pressures do start to intensify, then you have an issue. It's not something we're really kind of concerned about here over the next 18 to 24 months, though. Okay,
so in terms of not being concerned in the near term, that makes sense. What about the other side of the coin, which is the opportunity that it presents for Alphabet? Can they ramp up production of these? Can they actually get these to customers quickly who may want them?
Yeah, I mean, and to the extent that they're looking at this strategic pivot, I think remains to be seen. But yeah, I mean, listen, it's an opportunity for them. Again, I don't think they take up a huge chunk of the market. I think it's actually a bigger play and opportunity for Broadcom, to be honest with you. And as you kind of go into 26 and 27, the accelerating growth that you're going to see in their semiconductor business, I think is kind of a nice, intriguing play alongside their software offering, where if you have any concerns about share loss from NVIDIA, take a look at Broadcom, because that becomes a nice, interesting play on a company that will be taking market share here on that custom silicon growth, as they also continue to broaden out their customer base outside of just Alphabet's TPUs to other custom silicon vendors.
Angelo, if we were having a conversation last week, we'd probably be talking about, and we'd probably started the conversation with equity valuations. And I'm just wondering how you're looking at valuations right now, where there's been some talk about, okay, things are looking a little bit bubbly right now.
I actually feel much better about valuations today than I did 3-4 weeks ago.
Why?
And it almost kind of self-corrected itself out, right? So when you look ahead of just late October, look at valuations, they were essentially where we were at the June 24 tech highs, and essentially at 20-year highs. So you kind of look at what the market has done here. We've actually had a better than expected Q3 earnings season. On top of that, also a pullback here, on the tech side. That's really kind of compressed multiples to now where you would expect multiples on a forward basis to be here over the last 5 years. So when you look at valuations, especially given the earnings growth that we see over the next 18 to 24 months, We actually think this is an enticing opportunity, especially with some of those larger cap tech names. You look at maybe some of the most reasonable valuations out there. Meta and Nvidia really kind of stand out at this point in time, where I think they could be kind of nice rebound plays on the sharp pullback they've had.
Hey, just 20 seconds, Angelo, before we let you go. We just had an interesting conversation with Alistair Marsh about data centers and what could happen in the United States to the electric grid, and China actually taking a lead as a result of infrastructure issues here. Just very briefly, how could that rein in data center growth and development here in the U.S. if that were and is some sort of boundary or barrier?
Yep, to us, it's one of the biggest risks going into 2026, the energy bottlenecks, and more so into 27 and 28, right? As we start transforming and changing the narrative from the bookings growth expectations to one where it's also all about execution of these data center buildouts.